What's going on, Chris here? We're going to look at the daily overview. Coffee portfolio performance, we're still just holding on by a thread from 1.87 in the account balance to zero point 0.4. So we've dropped significantly, holding our positions, and we've become investors at this point with leverage. And we're going to see what comes next. This is like the most interesting part, which is this week. We got GDP, we got earnings from Tesla and Microsoft, we got, I think, the PCE as well, and then to the end of the month we got the Fed rate hikes. So it's going to be very special. To stay in the competition, I think I have to change a position or something and be a little active. And I think all I have to do is decrease something by 1%. So that's what I'll do. Sorry for the hiccup. But going into the Ninja portfolio performance. So this hasn't been updated. It's updated new accounts, but specifically the top two have passed the eval status. They're not really 50K. It doesn't really have 50K in there, but here we've passed 53 grand, and that's eligible for passing the evaluation phase, going into a performance live account. The trading days is up to par, and profit loss is above 3 grand. So this needs to be updated, but the things that did get updated, we added 2 new accounts. So since we passed 2, we're just going to add 2. And then eventually, these 2 accounts will be funding the fees and being able to help us grow more accounts off of this to where it's self-sustainable, to where I no longer have to contribute money to this thing, and it'll have its own war chest, to where it's its own thing, and it has its own capital buffer. So that's kind of just the next in line. We're just waiting for things to progress with that. I have to sign some documents, and I have to submit like some kind of some contracting form. Daily closing thoughts. We're going to take a look at the SP500. So looking at it from the weekly perspective, we're a little bit above weekly resistance. So right now we're into resistance. We haven't closed above it. So that's kind of just what's interesting. And we are into the prime seller zone of the bear trap, or the bull trap. So we're into the really fast one and the slow one, and it's a make or break. Literally, we are the make or break. And something that would foil this is if we get back below this daily resistance here, and that this becomes resistance. So if you assume that the institutions are right, then you would want to short around here. That's kind of just the ideal, is that you put your stop above the last high. And we can see here the institutions are bearish. When we look at the math cycle, it's saying for a rally up in this intra week. And we just don't know what's going to happen. But playing the odds, in terms of risk management, if we do 1% per trade, we get technically 100 trades that we could stretch to where eventually we become right. And in terms of risk to reward, risk is to the downside. We had a breakout on the day, I think, yeah, and we would like it to come back and retest to see if it's strong. So it's going to be a prime day tomorrow for an entry. So that's pretty much the S&P 500. We're roughly within the fake out range, and anywhere near the daily open or above is a really good place to get a position, in my opinion. But we will wait and see if we're able to get back above the daily open. If not, we will look for a resumption down. Looking here, this is kind of just the thing we're going to be watching for a. It looks like we're slowly recovering this breaker zone. So if we can recover it and close above it and just start trending above, that's good for getting a short position. And that's what we plan to do. I was able to draw out the 50% line and then the end of this box. So this is our range, and we want to roughly get at the 50% line or a little bit above, and we'll develop a position. But if we do not, if we're not able to continue higher, then we're going to have to make do. Most likely, we would want either a 4-hour market structure break to the downside or a rejection from this candle low, and yeah, roughly. It does look like we have a gap here to fill, and it might fill it. There's a good chance that it'll fill it. But any kind of like close below on the 12-hour and retest there is something we're likely to take for a position to the downside. But we don't know how that will how likely that's going to happen. So right now we're about to retest the downside here on the 4-hour, and we'll see kind of how things go. It looks like maybe we'll have to really wait until the market open for news and what's it called, earnings. If we were to take a look at the earnings calendar for this week. Today we got Microsoft, so it's a really big deal. Walmart, Johnson & Johnson. As far as I know that discretionary, like Walmart, has been pumping up. And if there were to be a surprise or upsetting news along with Microsoft, it wouldn't be good. And then we got Tesla Wednesday with Boeing. And we already know that Jim Cramer, he loves Boeing. So we'll see if that is able to continue. And then we got, I think, Intel. I think that's Thursday. And then oil companies Friday, or Chevron. And then we got VLO, it's oil, Thursday and Friday. So like this does seem like kind of like a really big week for earnings, as far as like, hey, this could make or break something. And we're at a make or break point. And any kind of market structure break to the downside I'm going to take, because I just knowing that this week is a high impact week, and just trading on market structure signals, it's something we got to just be really sharp to. And then going into the earnings calendar, so I actually like looking at this earnings calendar that we got here from E8. We'll log in really quick. And then we're going to go to U.S. Friday. Monday, Tuesday. So technically we already had Monday. So we're going to look at Tuesday. Okay, so I think I have Tuesday highlighted, and then Wednesday, and then Thursday, Friday. So it looks like Tuesday we got PMI. So that's really important. It's a high impact news, and then that's roughly at 9:45 a.m. So that's something that could affect the trend. And then we got earnings, of course, and we could see here. It doesn't say if it's before or after the bell. If we look at Microsoft, if it's here, I don't know where it is. Okay, here. For some reason, it'll list everything else but Microsoft for before or after the bell. Oh, there it is. It's after the bell. Let's look for what's before the bell. I don't know. Maybe it's gonna. We might get some kind of interesting news with PMI. Wednesday, oil inventories, and then what's funny is like Thursday, Friday we've got oil earnings, and then GDP Thursday, and Friday, core PCE. So, gonna be just a large string of news, bang, 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 and then Fed rate hike the following week. So we'll see just how we close the month. Right now, it's at a prime week to where we could put in a reversal pattern this week. If we look at just our current overbought top signal indicator, we're almost there. On the 8-hour, we're pretty much there. So we'll wait until that turns yellow before we start turning on any bots for going to the short side or listening to any kind of market structure breaks. We're going to wait until we get some yellow topping signal, and then by Wednesday, we might see the 12-hour turn yellow. We'll wait and see, but this is kind of like a big point that we need to watch to see if there's going to be some kind of flip. So getting rid of that and replacing it with the correct one. We're going to just copy that, put it over here. So that's the correct one. We're going to be watching with every hourly close to make sure that we're still in this fake out range and that this is the high. The closer we can get here, the better. And the closer we can get to here and all the oscillator settings flash in yellow, even more better. And then we're able to get a really good entry for possible top whenever the market structure breaks. Right now, we're kind of lying in wait. And the ideal thing would be that if price just moves super slow, going into Tuesday and then going into Wednesday. We're not guaranteed that. We might get some really wide wicks, but we'll kind of wait and see what happens. When we move the oscillator to the weekly and daily, we're able to see how that this picture could flip to the downside at any moment with this weekly. And at the same time, the opposite is equally true, but it's not really confirmed until the weekly close. But whenever, because we're at the edges of the downtrend represented by the bull trap that we see here, because we're at the edges, any kind of hint of piling into a position is just too big, too awesome of an opportunity for a short. It's like the prime short spot, which is at a breakout point for the bulls without a retest. So that's kind of just my view. It's easy to get the FOMO, but the safest is waiting for a weekly close above here and getting in at the retest resumption or the retest. But because we're nowhere close to that, we're actually pulling back for a retest on the daily. It's something to keep in mind because we're in a big decision week. We got institutions bearish, and depending on anything else like probabilities and options delta, you don't know if that's gospel. Did anybody do any case study work to see if that's still valid this year or last year or anything like that? As far as I know, price still has a good probability being correct, and as far as good understanding and market structure breaks as well. And then also the fundamentals are also in line with a short side bias. So they agree with the institutions, and a lot of people want to hang their hat on some hope on the Fed or earnings doing really well or GDP doing really well. And someone's trying to sell you some hopium, man. Like, that's all I can say. It's just better to wait for confirmation, and the confirmation is on the weekly close, above 40.61. It's about 65. And we're just right there. We're right at resistance. You just don't buy at resistance. That's not a thing. So wait for market structure break. People's entries are different, and they're alpha with their entry alpha. But for the most part, we're at an ideal selling point. If you're able to have some kind of edge in entry, this is like the time to use it, which is within these next 2-3 days. Oil, HYGH, credit spreads. So oil, not surprising. We're right at the bull trap high, right at the weekly breakout. Haven't even retested, and we're going to wait and see what happens. It looks like it's doing the same thing at the breakout with no retest and at a really good juicy spot for a short, and no confirmation for bullish dominance. Credit spreads, HYGH, looking like we've already retested the breakout that was supposed to be support, but now is resistance again, and it's holding as resistance. We just have to close the week below. And currently on a daily closing basis, it's holding as far as a deviation, left shoulder, right shoulder, swing failure pattern. We'll kind of take it by ear, but it looks like we're possibly getting ready to re-enter the range if we haven't already. And there is a divergence. HYGH is going down, the market's going up. So it's bearish. Smart money is saying that we got more bearishness ahead. LQDH looks like an island reversal. I don't know what's going to happen to it. This is a little bit of an outlier. But as far as HYGH, that's the one that's classified as smart money. The euro. So when we look at the MetaTrader 4, it does look like we kind of broke out, and we started a new 12-hour bullish order block. So we'll be watching to see if this resistance holds, and we don't get back above it. And we do have a gap down here. So this area is a little concerning. It's basically establishing like a no man's land, and if we got a break here, it's definitely toast. But it's trying its best to break out. It's getting a little weak. That's what I would say, or it's just consolidating. But so is the Japanese yen in some way. But we haven't broken down. So that is the one positive thing for the bears, is that the Japanese yen hasn't really rolled over. The euro is trying to break out, but it's struggling. And then the VIX, where we got an island reversal on the downside, and we could spring up and fill it. So that's kind of just, we're waiting, we're lying in wait, and we're just kind of biding our time and having fun and enjoying ourselves while we wait. So that's pretty much it. Looking forward to the next trading sessions, especially for any kind of big moves to come, and the weekly close. The weekly close is going to be important. Who knows which direction it's going to go? I already have my bias and what I'm thinking and my play. I'm not really going to take any breakouts to the upside. We're just at resistance. You just don't buy into resistance. And if we were to do a daily breakout retest and then resumption, maybe. But it does seem really risky going into like weekly resistance. And and we're at the top of the bull trap. Like, you just don't do it at the top of the bull trap. You would wait until it's a full breakout, and there is no breakout yet. And so right now, we're gonna wait for confirmation of the downside. And I think we started a new 4-hour breaker here, so we would just wait for it to go the other way for a correction. And the same could be said of the H12. Like this one started it again as a new one, but I think for me the 15-minute breaker is enough. Like I'm looking to play this range, and if we wick above, I'll look to short the next market structure break. So that's pretty much it. That's my plan. Talk soon.